My dear students, today we are going to discuss the financial accounting for CMA intermediate applicable for June examination. I mean NTP set 2. So please follow. The question number, I mean section A, the question number is 1. Multiple choice questions. Which of the following is not a method of charging depreciation? We are all know there are so many methods of charging depreciation. Here 4 methods are given. So out of that you have to select one among which is not a method of charging depreciation. So sinking method is a method of charging depreciation. Sum of years digit method it is a method of depreciation. Working hours method, this is also, that is machine hours, like that. So it is also a method of charging depreciation. Asset life cycle method, it is not a method of charging depreciation. So the answer is D is the correct answer. D is the correct answer. And then outward invoice issued is a source document of dash. Outward invoice means sales invoice. Inward invoice means purchase invoice. Here purchase book, sales book, written out inward books and then written outward books are given. Out of that, which belong to the source document of outward invoice? It is for sales book. Sales book is the correct answer. Please note it down. So sales book is the correct answer. And the next, which of the following errors is an example of omission? In case of the rectification of errors, there are so many. I mean error of commission, error of omission, like that. If you are omitting a transaction, that is called error of omission. In error of omission, there are 2 types. That is fully omission, partly omission. Here, the following errors is an error of commission. The following errors is an error of commission. That means what? Following errors. Example, sale of rupees 5,000 written in the purchase journal. Actually, the transaction is pertaining to sales, but it was entered in purchase journal. So, it is error of commission. Wages paid to Shyam debited to his account. Actually, wages paid means my wages account should be debited. Instead of that, Shyam account is debited. So, it is also error of commission. The total of sales journal has not been passed to the sales account. So the total has not been passed to the sales account. That is, it has been omitted. So the answer will be, C will be the correct answer. The total of sales journal has not been posted to the sales account. That is the correct answer. Please make note of it. So C is the correct answer. And then here, as on 31st March 2024, the debtors and then additional bad debts are given. That is, debtor pertaining to, the debtors were rupees 8 lakhs and then 10,000 rupees respectively, that is belongs to bad debts. If the provision for bad debts is made at 5% on debtors, the amount of such provision will be normally the bad debts. Sometimes bad debts given in the trial balance, sometimes it is given in the adjustment. So here additional bad debts, that is, it is supposed to be given in the additional, adjustment. So the total debtors is, just a minute, total debtors how much? 8 lakh rupees. So less we have to deduct it, additional bad debts, that is how much? 10,000 rupees. If we deduct 7,90,000 will be the remaining, on which we have to create the provision for bad debts. So how much? What is the percentage? That is 5% we have to create. So less provision for bad and doubtful debts. How much? 5%. So what is the amount? So 7,90,000 into 5%, that is 39,500 rupees. This amount is for the provision for. Actually 39,500 rupees is the correct answer. So here answer is C is the correct answer. Please make note of it. C is the correct answer. And then the party who is ordered to pay the amount is known as the payee or drawee or endorsee. The party who is ordered to pay, actually, in case of bill of exchange, there are three parties, drawer, drawee and then payee. So here the party who is ordered to pay, actually if I draw any bill, it is to be accepted to the drawer, and then drawee is ordered to pay, the amount is known as. So the answer is C is the correct answer. Please make note of it. C is the correct answer. And then question number 6, income statement of the charitable institution is known as statement of profit. Normally in case of profit making company, we are preparing trading account, profit and loss account. In case of charitable organization, we are had to prepare income and expenditure account. That is the thing asked in this question. So income statement of the charitable institution is known as, that means we have to prepare income and expenditure account. That is the correct answer. So answer is C is the correct answer, income and expenditure account. And then question number here 7, the opening and closing balance of the debtors of rupees 30,000 and then 40,000 respectively. The cash collected from the debtors rupees 2,40,000. Discount allowed is rupees 15,000 for prompt payment. The bad debts rupees 10,000. The total goods sold on credit. So in this question we have to prepare the credit sale. So for which we have to prepare, open one total debtors account. If we post all the transactions, the missing figure, the balancing figure will be the credit sales. We will prepare this one. So the total debtors account, we have to prepare total debtors. So the opening balance is also given, and then closing balance is also given. What is the opening balance? The opening and closing balance of debtors. So to opening balance, B bar D, that is how much? 30,000 rupees. By closing balance C bar D, that is how much? 40,000 rupees. And then cash collected from debtors, that is cash account debit to debtors account. So by cash it should be credited. So by cash, how much? 2,40,000 rupees. And then discount allowed, it is an expenses. So discount allowed account debit to debtors. So by discount, how much? Discount allowed, how much? 15,000 rupees. And then for bad debts also, bad debts written off means it is a loss. So bad debts account debit to debtors. So by bad debts, how much? 10,000 rupees. So if we balancing, we have entered all the transactions. Now if we balance, we will find out what is the credit sale. So 2,40,000, how much? 2,40,000 plus 15,000 plus 10,000 plus 40,000. So 3,05,000 rupees this side. So 3,05,000 minus 30,000. So 2,75,000 will be the sales, credit sale. So 2,75,000 to credit sale, sales credit. So this is the answer. So here A 2,55,000, B 2,45,000, C 2,95,000, D 2,75,000. So D is the correct answer. Please make note of it. D is the correct answer. And then, so donation received for a specific purpose. Donation received for a specific purpose means, actually there are two types of donation. Donation is a revenue nature and the capital nature. So if it is a capital nature, it is capital receipt. Actually the donation received for a specific purpose, for building, donation for building. So only for constructing the building we are accepting the depreciation, donation. So donation received for specific purpose, that is called capital receipt is the correct answer. Capital receipt. Actually it has to be provided in the, mentioned in the liability side. So this one is capital receipt is the correct answer. And then in the absence of specific provisions of the partnership deed, at what rate of interest on capital of the partners would be? Actually, if the partnership is silent, no interest on capital will be provided. So there will be no interest on capital, no interest on what shall I say, interest on drawings, and then only interest on loan will be provided. So there may be some mistakes in this question. It may be instead of capital, if it is instead of loan, it will be correct. Understand? So interest of loan at 6%, even if it is silent, partnership deed is silent, the interest on loan will be fixed at 6%. Interest on capital, it is not it is not interest on capital, interest on loan. So the answer, if it is interest on loan, the answer is 6% is the correct answer. Please make note of it, some mistake is there. And then next, the opening inventory 9,600, purchases less returns 11,850, salaries 3,200, wages 750, commission on purchases 200, carriage outwards 300, sales 24,900, closing inventory is given, carriage on purchases, and then what is asked in this question, compute gross profit. So gross profit we have to prepare trading account. If we prepare trading account, we will find out the gross profit. So trading account we have to prepare trading account. So trading account, what is the opening inventory? So to opening stock how much? Opening stock 9,600 rupees, and then purchases less returns. So purchases less returns how much? 11,850, and then salaries will appear in the profit and loss account. Wages we have to mention here. To wages we will take wages rupees 750, and then commission on purchases means it is also a trading expenses. To commission on purchases how much? That is 200 rupees we have to take into account. And then carriage outward will be appearing in the profit and loss account debit side. Sales 24,000 by sales how much? 24,900, and then closing inventory by closing stock how much? Closing inventory 3,500 rupees, and then carriage on purchases, that is the commission on purchases, and then carriage on purchases rupees, carriage on purchases 1,000 rupees actually, ₹1,000, and then closing stock. So if you balance, you will find out the gross profit. So 24,900 plus 3,500 plus minus 9,600 minus 11,850 minus 750 minus 200 minus 1,000. So 5,000 rupees will be the gross profit. So to GP 5,000 rupees. So this answer, the total amount 24,900 plus 3,500, so 28,400. So 5,000 rupees is the gross profit. So answer A is the correct answer. And then bad debts are apportioned among department in the proportions of bad debts. Normally bad debts means actually the person who is not in a position to pay the money. For we would have made a sale, out of that some amount is we are not getting, that is bad debts. Here bad debts are apportioned among departments in the proportions of, what will be the correct answer? Sales of each department, slightly correct. The number of units sold by each department, so on that basis the bad debts will be apportioned, that is the correct answer. The cost of sales, it is not none of the things. So the answer will be B is the correct answer. The number of units sold by each department, that is the correct answer. Please make note of it. B is the correct answer. And then this question is, the plant worth rupees 80,000 had been insured for 60,000. The loss on account of rupees 50,000. The insurance company will bear the loss to the extent of dash or the limited purchased the machine on hire purchase. Actually, you have to see What is the cost of the machine? Actually the plant, here it is a plant. So the plant for which we have insured. So insurance policy amount is for 60,000 rupees. For 80,000 the value of plant for which we have insured 60,000 rupees, but the actual loss on fire is rupees 50,000. What would be the claim? We have to apply average class. That means what? We have to find it out. So the total 80,000 rupees, it is the value of plant for which we have insured to the extent of rupees 60,000 rupees. Actual loss on fire is rupees 50,000. So what will be the claim? We can claim from the insurance company. So this will be the correct answer. So 60,000 divided by 80,000 into 50,000. So answer 37,500 will be the correct answer. So here A is the correct answer. Please make note of it. A is the correct answer. And then 37,500. And then next, CP Point sells computers on hire purchase cost at cost plus 25%. The term of sale is 10,000 down payment and eligible monthly installments of rupees, 8 monthly installments, 8 monthly installments of 5,000 rupees. Each for each computer. Compute the HP price, hire purchase price. Hire purchase means how much down payment is there. Actually down payment at the time of purchases, how much we are paying, that is the terms of sales down payment that is 10,000 rupees. Apart from that, we have to pay monthly how much? 5,000 rupees monthly per month. For how many months? 8 months we have to provide. That is 8 installment we have to pay. The total installments, so 5,000 into 8, that is 40,000 rupees. This will be the hire purchase price per computer. So 50,000 will be the correct answer. So 50,000. So answer A is the correct answer. A is the correct answer. Make note of it. And then next one is, as per accounting standard 16 of the following are qualifying asset. Actually qualifying assets means what? What are the qualifying assets? And then here the manufacturing plants and power generation facilities, and then inventories that require substantial period of time, and then asset those are ready for sale. So 3 types of transactions given, but as per accounting standard 16, which one? All of the following qualifying assets except what it is asked. Actually here the manufacturing plant and machinery, it is a qualifying asset. Inventories that require substantial period of asset, time, that is also a qualifying asset. So the question except, it is asked except. So all assets those are ready for sale, that is not a qualifying asset. So all the other assets, it is a qualifying asset, it is a qualifying asset, it is not a qualifying asset, but it is asked in the question. So as per accounting standard 16, all of the followings are qualifying asset except, so this is not a qualifying asset. C is the correct answer. Please make note of it. C is the correct answer. And then areas involving different accounting policies for different enterprises are area of involving different accounting policies by different enterprises are. That means what? So valuation of inventories, treatment of intangible assets, and then recognition on the profit on long-term contracts, all of these. So what are the accounting policies? Different companies following different accounting policies. For inventory policy or depreciation policies, so many policies are there. So valuation of inventories, it is also correct. Treatment of intangible assets, that is also correct. And then recognition profit on long-term contracts. So all of this will be the correct answer. So areas involving different accounting policies by different enterprises are, all the 3 are correct. So all of this is the correct answer. Please make note of it, all of this. So A part is over, and then section B we will see. So section B, the first question is, on 1st April 2022, SOM Limited purchased a plant and machinery, for 66,000 and spent rupees 5,000 rupees on shipping forwarding charges, and then rupees 7,000 import duty, rupees 1,000 for carriage and installation, and then rupees 500 as a brokerage, 1,000 for carriage, and 7,000 for import duty, 500 for iron pad. So all these expenses will be included in the cost of the plant. So it is additional expenditure at the time of purchases. The actual price is only 66,000. Apart from that, some other expenses incurred. So these to be added in the cost of the machinery. So 5,000 plus 7,000 plus 1,000 plus 1,000. So these all the amounts must be included. It was estimated that the machine will have a scrap value of rupees 5,000 at the end of scrap value. And then the useful life is 15 years. That means what? Useful life is given, scrap value is given, cost of the machine is given. So it is assumed that they are following straight line method. So under straight line method, we have to calculate how much of the depreciation will be provided for every year. On 1st January 2023, repairs and renewals of rupees 3,000 were carried out. Actually, repairs and revenues is a revenue nature. It will be entered actually in the profit and loss account. It is to be shown as an expenditures. So it is not to be debited to the machinery account. It is to be debited to the profit and loss account. Here it is asked to prepare machinery account. So on 1st October 2024, the machine was sold. Actually, the machine was purchased on 1st April 2022. After that, the machine on 1st October 2024, the machine was sold for rupees 50,000. Prepare machinery account for 3 years. So we have to prepare 22-23 and then 23-24, 24-25. 3 years we have to prepare the machinery account. Let's prepare machinery account. Machinery account we will prepare. So first of all, we have to find out the depreciation value. What is the depreciation value? Depreciation value under straight line method. We have to, so what is the purchase cost? Actually, here the purchase cost means rupees 66,000, and then shipping and forwarding, that is also to be included. How much? In the cost of the plant. And then import duty. How much import duty? How much? Import duty is 7,000 rupees. And then carriage and the installation. So the installation expenses also to be included in the stock. That is 1,000 rupees. And then brokerage. That is commission provided for acquiring. So brokerage rupees 500 rupees. And then iron pad. So in order to install, we need iron pad. So that iron pad is also to be included, 500 rupees. So this is the cost of the machine. How much is the cost of the machine? So 66,000 plus 5,000 plus 7,000 plus 1,000 plus 500 plus 500. So 80,000 rupees the cost of the plant. So the total cost is 80,000. Total cost 80,000. So there is a scrap value, residual value. So at the end of the life. So how much less residual value? Residual value 5,000 rupees. So the total disposable value is 79,500 rupees. 5,000 rupees. That's one. Just a minute. 80,000 minus 5,000, that is 75,000 rupees. So the life of the machine is 15 years, I think. So life of the machine 15 years. So the depreciation under straight line method will be, we have to calculate 75,000 divided by 15 years. That means 75,000 divided by 15 years. That is 5,000 rupees per year. So we have to charge depreciation 5,000 rupees yearly. Now we have to prepare machinery account. plant account or machinery account, whatever it is. So machinery account. So in the machinery account, date, what is the date? Actually date, particulars, amount, date, particulars, amount. So on 1/4/2022 we purchased, so to bank, we have to mention like to bank, how much? The actual cost is 66,000. And then on the same date we incurred some other expenditures, that is shipping and forwarding, and then import duty, carriage, installation, brokerage, iron pad. So 5,000, 7,000, 1,000, total how much? That is 14,000 rupees we have to add. That is the cost of the plant. Total 80,000 rupees. Every year at the end of the year we have to provide a depreciation. Actually depreciation how much? 5,000 rupees we calculated. So date 31/3/23 by depreciation, actually 5,000 rupees. So remaining, so 80,000 rupees total here left hand side. If we balance, the remaining balance will be 75,000 rupees. That is as on 31/3/2023. And then if we transfer, if we bring back here, that is on 1/4/2023 opening balance to balance brought down, that is 75,000 rupees. And then we have to calculate the same amount for the next year also, because we have used the machine throughout the year. So 31/3/2024 by depreciation, that is 5,000 rupees. So you have to balance 75,000 minus 5,000, that is 70,000 will be the closing balance at the year of the end, that is the same date, by balance C body carry down. And then the opening balance, so 1/4/2024 to balance brought down, that is 70,000. Now actually when we are disposing the unit, actually we disposed it on 1st October. This machine was sold for rupees 50,000 rupees 1st October. So we received 50,000 rupees. So by bank, actually 1st October 10/24. So by bank, so bank account debit to machinery account or plant and machinery account, that is 50,000 rupees we received in cash. There may be up to that period we have to provide for depreciation. So when we dispose it, actually the as on opening balance, that is 70,000 rupees. April, May, June, July, August, September, that is 6 months over. On 1st October we are selling. So 1st October 50,000 rupees selling. So depreciation we have to provide up to the period. So by depreciation, so for 6 months, 6 months means for 1 year 5,000 rupees. For 6 months, for half a year, that is 2,500 rupees we have to mention. And then what will be the loss? Actual cost, we have to find out the book value as on the date of sale. Book value 70,000 opening minus depreciation up to the date of sale, that is 2,500 less. So 67,500 rupees, but we sold for only 50,000 rupees. Understand? Please make note of it. As on 1/4/2024, that is how much? 70,000 rupees. So depreciation, less depreciation up to 1st October 24, that is 2,500. So 67,500 rupees, it is a book value as on the date of sale, that is as on 1st October 24. For how much we sold? Actually we sold for only, sales value 50,000 rupees. So the cost is 67,500 book value, but we sold only for 50,000 rupees. So there will be loss, that is 17,500 rupees, that is a loss. So it is P&L account. We have to, we should be debited. So by P&L account. P&L account, that is a loss on sale. Loss on sale, that is how much? 17,500 rupees. So if we close the account, the total will be tallied. So here 70,000 rupees. Here also 50,000 plus 2,500 plus 17,500. So 70,000. That's all. We have prepared. Plant account, machinery account we have prepared. And then regarding the repairs and maintenance, I had already explained the repairs and renewals of rupees 3,000. It is to be actually it is an expenses. It must be debited to the profit and loss account. It is not to be debited to the cost of the machine, machinery account. So it's over. And then we will see next question. So the rectification, it is very, very important. Rectify the following errors, assuming that the errors were detected and then before trial balance. Rectification, there are three types of rectification. The first stage is before trial balance. It may be in the subsidiary book or journal book. And then after trial balance, for which we have to prepare one suspense account. So all the mistakes will be in the suspense account. So it should be rectified by adjusting the suspense account. And then it is after the preparation of the balance sheet. So next year we have to rectify the mistakes. So all the three are asked in this question. So after preparing the trial balance, and then before preparing the trial balance, and after preparation of the final accounts, so we must be in a position to understand. So here we have to prepare all the three. Purchase planned for rupees 10,000 wrongly passed through purchases account. Actually, it is a error of principle. Actually, in the case of before preparations, we will see, just 1 minute. We will see. Here, first stage, before, and then we will write like that: before trial balance, after trial balance, after preparation of balance sheet. So these two rectifications are to be done within the year, and then in this case, after preparation of the balance sheet, the rectification will be done in the next year. So I had already explained in the previous set 1 question paper itself. After we have to insert one account, the profit and loss adjustment account, or period items, like that I had explained. Here we will see one by one. Purchase planned for rupees 10,000 wrongly passed through purchase account. We have to pass correct entry, wrong entry. What is the correct entry? If we purchase planned, it is an asset. According to a real account, debit what comes in. So the correct entry is plant account debit to cash or bank. This is the correct entry. But he didn't make that correct entry. He has committed some mistake. Instead of debiting the plant, he entered the entry in how much? That is purchases account. Purchases account debit to cash or bank. So how much? 10,000. So in this, actually plant should be debited. Here purchases should be debited. So plant should be cancelled. We will accept the purchases account. So we have to keep it purchases account. It should be cancelled. So correct entry will be purchases account debit to plant. We have to cancel the plant. Plant account should be debit. Sorry, sir. This is a correct entry. Actually, this correct entry. This is a wrong entry. Actually, this is correct entry. This is wrong entry. So correct entry we should pass. Purchases account should be cancelled. Plant account should be entered. So plant account debit to purchases. 10,000. So this is the correct entry in the case of before trial balance. And then in after trial balance also the same, the correct entry, wrong entry, and then we have to rectify entry. The same entry will be there. Plant account, the same. plant account debit to purchases. So same 10,000, 10,000. After balance sheet, actually here plant and purchases. If you enter the purchases account, I mean for rectification purpose, if you are crediting the purchases account in the next year, it will affect the purchases of that year. If the purchases are affected, so the gross profit will also be affected. So instead of purchases account, any revenue expenditure or any revenue income, we have to enter profit and loss adjustment account. Understand? So this account we have to put it. So what will be the correct entry after here? What is the entry? Plant account debit to profit. Instead of purchases account, we will enter profit and loss adjustment account. Profit and loss adjustment account for 10,000, 10,000. So entry, the rectification entry will be, in this case, plant account debit to purchases. After trial balance, plant account debit to purchases, the same amount. So here plant account debit to P&L adjustment account. So this is a correct answer. Please make note of it. And then space is insufficient, so that, okay, next one is the sales day book was cast short rupees 1,000. Sales day book. So sales day book was cast short, I mean undercasting. Undercasting means actual sales. For example, it may be 5,000. Instead of 5,000, we entered only 4,000 rupees. So reduced amount. Actually, the sales should be credited for 5,000, but we credited only for 4,000. That means that was undercast by rupees 1,000. So we have to credit. So in the case before trial balance, first case sales account will be credited further for rupees 1,000. That's all. That is the correct answer. So entry will be sales account. I mean sales account will be credited for rupees 1,000. In this case, I mean before trial balance, we have to pass rectification entry. Sales account debit, I mean sales account will be credited for rupees 1,000 rupees. That is a entry. If you write like that, that is rectified. But in the case of, so the mistake will be after preparing the trial balance. In this case, the mistake will be, we would have prepared one suspense account. All the mistakes will be in the suspense account. If we rectify, it will be adjusted in suspense account. So here suspense account, here, so suspense account debit to sales account. So we are crediting sales for rupees 1,000. So the mistake is adjusted from suspense account. It should be debited. So this is a correct answer in case of after trial balance. And then here, what will be the after trial balance? In this case, after balance sheet. In the third case, after balance sheet, we should not credit sales account. Instead of that, we have to credit profit and loss adjustment account. The entry will be suspense account debit to P&L adjustment account. So that is the correct answer. In the case of after balance sheet, in the case of after trial balance. So that's over. And then third, the cash paid to Mr. X for rupees 1,000 was posted to his account rupees 100. So here, cash paid to X 1,000 rupees. Actually, we have to prepare X account. X account means we have to give cash paid to X means X account debit to cash. That is 1,000 rupees. It is a correct answer. I mean, the X account should be debited for rupees to cash 1,000. But we didn't do that like that. So instead of that, we posted only 100 rupees. So instead of 1,000 rupees, we credited 100 rupees. X account is debited to cash. That is only 100 rupees. So still we have to make 900 rupees in the debit side. So X account will be debited for rupees 900 rupees. That is the correct rectification entry. So in the case of, I mean before trial balance. So what we will write, x account will be debited for rupees 900 more, that is correct, before trial balance. If it is after trial balance, what will be the answer after trial balance? So x account, actually after trial balance means we would have prepared suspense account. All the mistakes will be rectified through suspense account. So x account should be debited, the mistake will be adjusted in suspense account. So answer will be x account debit to suspense account. How much? 900. After balance it also the same, because it is not affecting the revenue natures, revenue expenditure or revenue income, only personal account, that is a sundry debtors accounts, and then suspense account. So in this case also the entry will be, after preparing final accounts, balance sheet. So same, x account will be debited, x account debit for 900 rupees to suspense account, 900 rupees. So this also is the correct answer. Please make note of it. And then purchases of goods, number 4. Purchases of goods from T for rupees 3,500 was rendered in the purchase day book rupees 500 rupees. That means what? Actually we have to pass normal entry. If we purchase, what will be the entry? Purchases account debit to party. If it is credit purchase, that is party account should be credited. So here only from T. So purchase account will be T. So here actually instead of purchases, total purchases amount 3,500, but we posted only 500 rupees. So still we have to enter 3,000 rupees. This is actual purchase value. But we purchase entry, we debited purchase only for 500. So the balance 3,000 rupees we have to enter more. So the purchases account here, purchases account should be entered. Purchases account should be debited for rupees 3,000 in this case. So purchases account is debited to T. So purchases account should be debited for rupees 3,000 more, because instead of 3,500 we entered only 500 rupees. So we have to pass the remaining balance 3,000 rupees. So the mistake in this case, we have to pass another journal entry, because we had already passed one entry, purchases account debit to T, that is for 500. So remaining balance we will pass another entry. So purchases account debit to T account. How much? 3,000. This is for after trial balance. So after balance we should not enter the purchases account. It will affect the gross profit of the particular year. So instead of purchases we have to mention P&L adjustment account. P&L adjustment account debit to T account. How much? 3,000. This is after preparing the balance sheet. So this entry, rectification entry, will be passed in the next year while correction. And then another one is, so cash paid to entered, this also entered, and then cash paid salary of rupees 3,000 wrongly passed through the wages account. Here we have to pass right entry, wrong entry, and then correct entry means actually we paid for only salary. So salary account debit to cash. This is a correct entry. But instead of that we passed wrong entry. Instead of debiting salary account, we debited wages account debit to cash. How much? For the same 3,000 rupees. So what will be the rectification entry? Salary, we have to enter salary, but we have to cancel wages. So the entry will be salary account debit. This is a rectification entry. Salary account debit, and then we have to cancel wages account. Already it was debited. If we want to cancel, it should be credited to salary account debit to wages account. That is 3,000 rupees. So this one. The same entry will be in the case of the after trial balance. The same after trial balance. So after trial balance, the same entry. So same entry, salary account debit to wages account, 3,000. But after balance sheet, we should not, accept the salary. We should not put salary and wages. All are revenue natures. Salary household expenses, wages are also. If you are correcting the wages, actually it is a direct expenses. It will affect the gross profit of that year. And then if you are making any corrections salary, that salary, the next year's salary will be affected. So instead of that, here salary, profit and loss account, adjustment account, debit 3,000 rupees. For wages also, wages should not be entered. Instead of wages, we have to pass P&L adjustment account, that is 3,000. So this will be the correct answers. Both debit and credit will be for only P&L adjustment account. So this question is over. And then next, it based on the consignment goods. Consignment. Mrs. Singha Traders of Surat consigned 5,000 liters of the edible oil costing rupees 32 rupees to M Limited. And then M Limited of Mumbai on 1/2/2024. He paid 5,000 rupees. Actually, consignor paid. If the consignor paid, consignment account debit to bank. So it is for freight and insurance. And then during the transit, 200 liters were destroyed. So the Singha Traders consignment goods sent how many liters? 5,000 liters. Out of that, 200 liters was abnormal loss. So remaining 4,800 liters are there. So the company agreed to pay, insurance company agreed to pay rupees 5,000 in full settlement. M Limited also paid some clearing charges, godown rent, and then salesman salary. So all these expenses. So it will be actually consignment account debit to consignee, M Limited. So how much this amount will be mentioned? He was entitled to 6% on ordinary commission and 4% on del creditor commission. On 30/6/2024, M Limited reported that 4,000 liters were sold at rupees 1,65,000 and 100 liters were lost due to evaporation. A customer who bought liquor for rupees 1,500 could pay only 40% of his account. M Limited paid on the balance due by check. Prepare consignment account in the books of Singha Traders. So we have to prepare consignment account. In the books of Singha Traders. We will prepare. So there is normal loss is also there. 4% del creditor commission, the insurance company, 100 liters due to here evaporation. It is normal loss. Please make note of it, normal loss. So it will not be valued. And then abnormal loss. And then he has sold how many liters? 4,000 liters. So 5,000 he has sent. 200 liters are abnormal loss. So 4,800 liters. Out of that, 100 liters, it is a normal loss. So 4,700 liters. Out of that, 4,000 is sold up. What will be the closing stock? 700 units will be the closing stock. We have to calculate the value of closing stock, consignment stock. So let's prepare here. So first, in the books of Singha Traders, consignment to M Limited. Consignment to M Limited. Roughly I am writing. And then, so first, goods sent on consignment. How many goods? How many liters of oil? Actually, The costing liters of edible oil 5000 liters we sent at rupees 32 rupees. So to goods sent on consignment, to goods sent on consignment, how much? 5000 into 32. So 5000 into 32, that means 1,60,000 rupees the goods sent on consignment. Apart from that, he has spent some expenditures, that means towards freight and insurance, this amount. So 5,000 rupees to bank, freight charges and installations, I mean insurance charges. How much? 5,000 rupees he spent. The consignee is also spent. How many expenses? Consignee spend means consignment account debit to consignee. So clearing charges rupees 6,100, and then go down rent, that is 300 rupees, and then salesman salary that is 900 rupees. So how much? 6,100 plus 300 plus 900, so 7,300 rupees spent by consignee. And then he is entitled to commission. Before that, how much for he sold, the account sales, where we will see account sale how much. So by consignee, by M Limited, how much he sold? Actually, yes, I mean 1,65,000 rupees for 4,000. So the sale amount is 1,65,000 rupees he has received. And then, so at what rate you would have sold? So 1,65,000 divided by 4,000 means, that means 41 rupees 25 paise. So 4,000 liters he sold at rupees 41 rupees 25 paise. And then we have to find out what the value of abnormal loss, that means good destroyed on, we have to find out goods destroyed for which letters destroyed, and then closing stock. Goods destroyed for 200 units we have to find out, and then closing stock, I mean consignment stock. So we will prepare in the note, please wait. Actually, how do we have to prepare? Cost of goods sold. So how many liters spent, and then what is the value? So cost of goods sold, I mean sent goods, cost of goods sent, how much? Actually 5,000 into 32 rupees. So 5,000 liters sent at the rate of 32 rupees, that is 1,60,000. The expenses, consignee expenses, freight, actually it is made by the consignor, freight and insurance charges. How much? 5,000 rupees. So 5,000 rupees is spent. So this is liters, this is amount. So total amount 1,65,000, liters 5,000 liters. Actually damaged is destroyed. How much destroyed? 200 units. For which how to calculate? For 5,000 units, the total cost is 1,65,000. So during transit it was lost. So for 200 units, I mean liters, what is the value? So 1,65,000 divided by 5,000 into 200, that is 6,600 rupees. 6,600 rupees. This is abnormal loss. So you have to mention here abnormal loss 6,600 rupees. Okay. After that, so 4,800 units he would have received. Actually the consignee received. So what is the value? 1,65,000. The cost for abnormal loss 6,600 minus, so the value 1,58,400. And then consignee expenditure. What is the expenditure? Actually consigning non-recurring expenditure only will be taken into account. Here three type of expenditure: clearing charges 6,100, Good on rent we should not take into account. I mean salary account we should not take for calculation of closing stock. And then clearing charges, that is clearing charges means it is a non-recurring expenditure, we will take into account. So 6,100 rupees. This one is, I mean clearing charges met by M, that is consignee. So how much? If the total is 1,64,500. How? Actually 4,800 liters would have received by M, the consignee. Out of that, one normal loss is there for 100 liters. So the total value of liters, I mean quantity of liters, that is 4,700. What is the cost? That is 1,64,500. So here already calculated, out of 5,200 abnormal loss, 101 normal loss, and then 4,000 rupees sold. So the remaining stock 700 will be the closing stock. We will find out the closing stock value. So for 4,700, the cost is 1,64,500. So what is the value of remaining closing stock of consignment stock of 700 units? So that is the value. So 1,64,500 divided by 4,700 into 700. So the answer will be 24,500. 24. This is a closing stock value. We will enter here 24,500. 24,500. And then, so commission to consignee. Commission. What is the commission? There are two types of commission, ordinary and then Delcreader commission. Delcreader commission means it is to be provided for undertaking the bad debts. So that is for Delcreader commission 4%, and then it is straight away it is given ordinary commission 4%. What is the sale value? 1,65,000. So 1,65,000 into 4%, that is ordinary commission. So 1,65,000 into 4%, that is 6,600. 6,600, that is ordinary commission. And then Delcreader 6%. Wait a minute. 1,65,000 into 6%, that is 9,900. 9,900 ordinary. And then Delcreader commission 4%. So 1,65,000 into 4%, that is 6,600. So the total 6,600 plus 9,900, that is 16,500 rupees. So 16,500 rupees pertaining to the commission, consignee's commission. So what is the value? The profit on consignments you have to find out. So total value, and then if you balance it, 1,65,000 plus 6,600 plus 24,500. So 1,96,100. 1,96,100. So minus 1,60,000 minus 5,000 minus 7,300 minus 16,500. So if it is Delcreader commission, the bad debts will not be. Actually bad debts will be undertaken by the consignee. So we should not, we have to ignore that amount while preparing the consignment account. So 16,500. So what will be the answer? 7,500 rupees will be the profit on consignment. So to P&L account, that is profit on consignment. So this is important. Bad debts, we didn't put the bad debts because Delcreader commission we provided for undertaking the bad debts, so it will not be appearing in the consignment account. Understand? This is over. And then next one is so it is a theory based question. We will see one by one. PQ Limited sold machinery having written down value of 80 lakhs to BR Limited for rupees 100 lakhs. The same machinery was leased back to BR Limited. So, BR Limited to PQ Limited. The lease back is operating lease. Examine if. So, what will be the answer? Examine if, what will be the answer? So, here, original owner is PQ Limited. He sold the machinery, the cost value mean written down value at the time of sale, written down value is 80 lakhs. He sold BR Limited for 100 lakhs. So the profit will be 20 lakhs. And then same machinery was leased back, the same machinery leased back by BR Limited to PQ Limited. So the lease back is a operating lease. Examine if, what will be the impact? So the first thing, sale price of rupees 100 lakhs is equal to fair value. That means, what we have to write like that? So, when sale price is 100 lakhs is equal to fair value, PQ Limited should immediately recognize the profit because the written down value is, written down value means WDV with 80 lakhs, but it sold for 100 lakhs. So, the balance is 20 lakhs is pertaining to the profit. So, PQ Limited should recognize immediately as a profit in his books of accounts. So, that is the correct answer. And then I will explain, that's all, because it is theory based. And then fair value, for example, if the fair value is 120 lakhs, what will be the answer? If the fair value is 100 lakhs, 120 lakhs means that also the profit of 20 lakhs because we sold it for 100 lakhs. The profit of 20 lakhs. Here also the profit is there. So 120 minus 100, that is 20 lakhs is the profit here in this case. It should be immediately recognized by PQ Limited. Here. So second one. And then fair value is 90 lakhs and sales value is 76 lakhs. Fair value 90 lakhs. 90 lakhs means, for example, 80 lakhs here. 80 written down value, but actually the sale value is 76 lakhs. That means 4 lakhs. 4 lakhs is a profit. Loss, actually 80 lakhs we sold for only 76. So 4 lakhs it is a loss. Immediately recognized by PQ Limited in its books of, provided the loss is not compensated by future lease payments. Otherwise, it can differ and amortize the loss. The loss should be amortized. So, it is answer for C. And then question number, fair value. If the fair value is 80 lakhs and sales price is 100 lakhs, then what? Fair value is 80 lakhs and sales value 100 lakhs, then here also the profit will be 20 lakhs. Is to be deferred and amortized over the lease period. That will be the correct answer. You have to write like that. And then E, the fair value 92 lakhs and sale price 100 lakhs. Fair value means there is a profit, that is 92 minus 80. So 92 is a fair value. 80 is a written down value. So 8 lakhs, 8 lakhs here. 8 lakhs, that is a balance of the profit. 8 lakhs it is a profit. And then one more things, 92 lakhs minus 80 lakhs. That means here, not 8, just a minute, 90, 12 lakhs here. (92) minus 80, 12 lakhs. So it is a profit. Sale price, written down value, profit 92 lakhs because fair value is 92 lakhs, that is a profit. So profit of 12 lakhs is to be immediately recognized in its books. And then balance of profits, once again 100 lakhs, that is 100 lakhs sales price minus 92, that is also 8 lakhs. This profit, the balance profit 8 lakhs is to be amortized and deferred over a lease period. What is a lease period? Up to that, the total throughout the lease period, it should be amortized. And then fair value of rupees 70 lakhs and the sale price is 78 lakhs. Here loss. So here also 80 lakhs minus 70 lakhs, that is 10 lakhs loss, is to be immediately recognized by the PQ Limited in its books. And the profit how much? 78 minus this 78, this 70. 78 70, that is 8 lakhs. So profit of 8 lakhs should be amortized and deferred over the lease period. So these are the treatment we have to write in English, that is the answer. So here next one is question number 4. Question number 4. The following information is available from Sasi, who maintains the books of account on the single entry system. Cash book balance and then sundry debtors. For the previous years, 1/4/2023, that is a opening balance sheet. It is a closing balance sheet. In order to find out the opening capital, because the capital is not given in this question, so opening capital we have to find out, closing capital we have to find out, the statement of affairs for 1/4/2023 we have to find out, and then prepare for 31st March also 2024 also we have to prepare. First this one, and then during the year, during the year means 23-24, Sasi withdrew rupees 5,000 from the business every month. That means drawings. Actually, statement of profit and loss account, the closing capital, add drawings, less capital introduced, and then adjusted capital, and then these are the things statement. But in this case, like trading and profit and loss account, we prepare that account. Just a minute. Sasi withdraw, so it is for drawings. During the year, she sold investments held by her 35,000 rupees. So during the year, there is one investment. Investment how much? It is not given here. Investment sold for 35,000, but that amount pluffed back into the business. Invested the same amount, that belongs to, that is what shall I say? It is additional capital. So this amount is additional capital. The 5,000 rupees per month. So 5,000 into 12, that is 60,000 rupees. It is a drawings. So 60,000 rupees drawings. 35,000 is additional capital. And then at the end of the year, it was found that the full year interest on loan interest has not been full. So interest, it is to be shown as outstanding. And then depreciation is to be provided for furniture's full year at 10%. Shop assistant was to be given a share of 5% of profit ascertaining before charging. In case of the profit and loss appropriation account, we have to before charging or after charging. If it is before charging, 5%. What is a disposal amount? Out of that, we have to find out 5% straight away, or otherwise 5 by 100, or if it is after 5 by 105, we have to find it out. So we will calculate this one. First, we will prepare statement of affairs account for the first year, second year. Tabular column we will find out. So balance statement of affairs as on 1/4 opening as well as end of the year we will find out. So 1/4/23 and then 31/3/2024. So 1/4/23, 31/3/2024. So if we can find out the opening balance sheet, opening capital and then closing capital. We will post all the transactions. So just a minute. So here cash and bank balance. How much cash and bank balance? 20,000, 21,000. So cash and bank. How much? 20,000, 21,000. And then sundry debtors. Sundry debtors how much? 17,000 and then 25,000. And then stock. Stock how much? Stock is 40,000, 60,000. So 40,000, 60,000. And then furniture. 29,000, 29,000, same figure. And then creditors are there. Creditors 32,000, 22,000. It has been reduced. So 32,000, 22,000. And then 10% loan. Loan from Sasi, Mrs. Sasi. How much? 30,000, 30,000. So if we balance, we will find out this is the amount. So opening capital how much? So in this case, how much? 20,000, 20,000 plus 17,000 plus 40,000 plus 29,000. So 1,06,000. 1,06,000 minus 32,000 minus 30,000. So 44,000. 44,000 is a capital. Capital opening here capital, that is opening capital. Here also 21,000 plus 25,000 plus 60,000 plus 29,000. So 1,35,000, 1,35,000, 1,35,000 minus, sorry, here we have to mention 1,35,000, 1,35,000 minus 22,000 minus 30,000, so 83,000. So closing capital was 83,000, opening capital 44,000. We found out. Next, statement of profit and loss account we have to prepare. Actually, normally we are preparing in the statement. Here, ledger format we will find out. So, statement of profit here. Statement P&L account for the period ended 31st March 2024. So here we will find out so this amount will be, so opening cap, actually closing capital, how much we find out? This is the closing capital 83,000. So closing capital we will start from the beginning. So closing capital 83,000. And then what is the opening capital? Opening capital 44,000. So this is for 31/3/2024, I mean current year. Further capital introduced means he has sold one investments for rupees 35,000, this amount. So that is further capital. So further capital 35,000. And then drawings account debit to capital account normally. So drawings how much we have to add normally while preparing statement of profit, so closing capital plus drawings. Drawings how much? 5,000 into 12, that is 60,000 rupees. So balance 1,43,000. So this is a trading profit. So trading profit 1,43,000 minus 1,43,000 minus 44,000 minus 35,000. So 64,000. So this is a trading profit. And then once again by trading profit we will write like that. Trading profit here, trading profit 64,000. And then here depreciation we have to provide for furnitures. Furniture value is 29,000. So to depreciation, this is current year, we have to 29,000 into 10%, that is 2,900 rupees for depreciation. And then interest on loan. Loan amount is 30,000. So it is not paid, but it is to be shown as outstanding. So 10%, that means 3,000 rupees will be shown. It will be In the liability sides also we have to mention. And then if we balance 64,000 minus 64,000 minus 2,900 minus 3,000, that is 58,100. That is net profit 58,100. From this, actually up to net profit you have to find out profit and loss account. After that, profit and loss appropriation account. So by net profit 58,100, out of which, actually the commission for shop assistant at 5% paid. So to commission, because before commission, so to commission to shop assistant, how much percentage? 5%. 5% on 58,500. 58,100. So 5%, that is 2,905 pertaining to commission. So remaining will be the net profit. So 58,100. So minus 58,100 minus 2,905. That is 55,195. That is a profit transferred to the capital account. So this is profit transferred to balance sheet. So you must make note of it, and then we have to prepare the balance sheet. So for balance sheet means statement of affairs is the same. Statement of affairs or balance sheet, both are same. Statement of affairs for the year ended 31st March 2024. So let us start from the opening capital. What is the opening capital? Opening capital is 44,000. Capital, opening capital 44,000, and then add additional capital. It is a sale proceeds of additional capital, investment sold, that is 35,000 he is bringing back to the business. So remaining 79,000 total capital less drawings. How much drawings? Every month he is drawing 5,000 for 12 months. So drawings, how much? 5,000 into 12, that is 60,000. So drawings, that is 19,000. Add net profit, we find out that amount how much? 55,195. So 55,195 we have to add. If we add 19,000, so answer 74,195. So creditors, what is the creditors value? Creditors the same amount, there is no change, 22,000. And then loan from Sasi, what is his name? Sasi, loan from Sasi, how much? 30,000. Actually, for interest for which we didn't pay that the money, it is outstanding interest, that is 3,000 rupees. We have to add, or we will say so separately. So 3,000 rupees interest, outstanding interest payable, add outstanding, so 33,000. And then commission also we didn't pay this amount. How much commission? 2,905. It is also not yet paid. So outstanding commission on assistant, 2,905. So that's all. Here cash at bank, that is 21,000, the same amount. And then debtors, there is no change, that is 25,000. And then stock 60,000. And then furniture 29,000. Less depreciation how much? 2,900. 29,000 minus 2,900, that is 26,100. So that's all. If you tally, it must be If we total, it must be tallied. So 21,500. So 21,500, 25,000 plus 60,000 plus 26,100. So 1,32,100. 1,32,100. Here also 74,195 plus 22,000 plus 33,000 and then 2,905. So 1,32,100. So it is tallied. This question is also over. Next question is, here the XY share profits and losses in the ratio 5:3. 5:3. So old partners, there are two partners, X and Y. They admit Z as a new partner for 1/5 share of the profits. He pays 80,000 as a capital. So 80,000 rupees for 1/5 shares he is bringing in as a capital. He does not contribute anything towards goodwill. So he didn't bring any amount pertaining to the goodwill amount. But it is valued, actually it is valued for 60,000 rupees. So what will be his share? So an adjustment entry we have to pass. So 60,000 rupees into 1/5, that is 12,000 rupees. 12,000 rupees will be the share of the goodwill of Mr. New Partner, Z. So he has to. So Z account debit. According to the sacrificing ratio, we have to find it out. According to sacrificing ratio, it should be credited. X account, Y account will be credited, The capitals of partners are fixed. Here, the capitals account, not fluctuating capital method. Here, they are following fixed capital method. Under fixed capital method, one capital account and then current account. Both accounts are to be maintained. And then, the balance sheet as on date, 31st March, it is given. So, the capital account 80,000, 60,000. The total capital is under fixed capital method. Whatever the amount pertaining to the capital account they have brought in, it will be appearing throughout the life of the company. So, whatever the capital, it will be appearing. And then one more current account for adjustment purpose, the current account is also to be maintained. So, they are maintaining fixed capital method. General reserve, 60,000 rupees, it will be shared. Normally, it will be shared by the old partners, old profit sharing ratio. And then one more sundry creditors is also given. Plant and machinery is given. Investment 31,000. Sundry debtors 60,000. Stock and debts, stock and trade 90,000. Bank balance 30,000. Total 2,61,000. So plant and machinery is valued. So valued means whenever the partner coming inside, we have to prepare revaluation account in order to find out the profit on revaluation. So the value of plant and machinery 46,000. Actual value 50,000. Now it is 46,000. So it has been reduced. So it should be debited in the revaluation account 4,000 rupees. 40,000 minus 46,000. And then stock, how much? Here stock is 90,000. But it has been increased by 6,000 rupees, 96,000 rupees. So 6,000 rupees income side we have to show. So it should be credited in the revaluation account. One creditor is debt. Actually, one creditor is debt. Nothing is likely to be paid. Actually, we will forget that amount because he has debt. So, it is an income. Actually, if liability decrease, that is an income. Understand? So, it will be shown in the credit side of the revaluation account. And then, capital accounts are to be proportionately adjusted on the basis of Z capital and his share of profit through current account. So, we have to prepare both simultaneously, current account and capital account. And then, based on the Z capital, what should be the others capital? We have to find it out. The partners decide to maintain the general reserve in the books of accounts. So, they are liking to maintain the reserves in the balance sheet. So, the first stage, the general reserve must be proportionately shared by the previous partners in the previous ratio. And then if we want to show again in the balance sheet, all the partners according to the new ratio, they have to bring back. So we have to show in the capital account also. So we will prepare one by one. So first we will prepare revaluation account. Before that we will prepare new ratio and then sacrificing ratio, and then calculation of the goodwill we will prepare, note we will prepare, and then we will go for next. So the partner X, Y are old partners, Z as the new partners. So old ratio between X and Y 5:3. That means 5/8 and then 3/8. It is a old ratio. One more partner, that is new partner Z, was admitted for 1/5 share. For 1/5 share means 1 minus 1/5. That means remaining share will be 4/5. So out of 1/5 is given to Z. The remaining will be 4/5. It will be shared according to 5:3. So the new profit sharing ratio will be 5/8 into 4/5. It is for X. 3/8 into 4/5. It is for Y. Z as same, that is 1/5. So if we multiply 5 into 4, 20. 20 divided by 5 into 8, 40. So here 3 into 12, 3 into 4, 12. 3 into 5, 8 into 5, 40. So here the same. So we shall equalize this. Actually, if we multiply both denominator and numerator, for example, into by 8, that it will be 8/40. So instead of 1/5, we can mention it as 8/40. So for Z, 8/40 or 1/5 same. So 8/40. So here 12/40, here 20/40. So the ratio, new profit sharing ratio is 20:12:8. If we simplify by 4, if we divide by 4, so 5:3:2. So this is the new profit sharing ratio. And then sacrificing ratio. Sacrificing ratio means old minus new. Sacrificing. Old minus new. For old partners only, we will have to find out sacrifice ratio. So old minus means new. Old means for X 5/8 minus new means 5:3:2 means 5/10 new ratio. Here old ratio 3/8 for Y. So here new ratio 3/10, 5 plus 3 plus 2, 10, up 3/10. So if we deduct, if you balance this, we will find out. So we will take LC 40. 48, 8 out of 40, 5 times, 5 into 5, 25. 10 out of 40, that is 4 times, 4 into 5, 20. So 25 minus 20, that is 5/40. So here also 40 LCM, 40 or 80, the minimum amount we will take. So 40, 8 out of 40, that is 5 times, 5 into 3, 15 minus 10 out of 40, 4 into 3, 12. So 15 minus 12, 3/40. So sacrificing ratio is 5:3. Okay, goodwill we have to find out. Actually, goodwill he didn't bring, but it is valued at 60,000 rupees. Goodwill valued at 60,000 rupees. So what is Z share? Z share, what is his share? 1/5 share. So 1/5 of 60,000, that is 12,000 rupees. Actually, the value of goodwill he has to bring in. So what will be the adjustment entry? He has to bring, and then his account must be debited, and then X account, Y account will be credited. What is the value of X in this? So out of 12,000 rupees, sacrificing ratio for X 12,000 rupees, sacrificing ratio 5:3 up. So 5 divided by 8. For Y 12,000 rupees, 3 divided by 8. So what is the value? So 12,000 divided by 8 into 5. So it is 7,500. 12,000 divided by 8 into 3. That is 4,500. So total 12,000. So the entry will be Z has to bring in so Z account debit. How much he has to bring? 12,000 rupees or goodwill he has to bring. It will be shared between X account 7,500 and then to Y's account 4,500. So this is one more entry we have to pass. So we know it. Now we have to prepare revaluation account. Revaluation account. Revaluation account, only two assets. Actually stock how much? Here actual stock 90,000 rupees. 90,000 rupees. Actually stock valued 96,000 rupees. So 6,000 rupees increased. So it should be credited. So buy stock 96,000 minus 90,000. So income is 6,000 rupees. And then plant and machinery, it is valued how much? 46,000 for plant and machinery. Here 50,000. So it is reduced. So to plant and machinery 50,000 minus 46,000. So 4,000 rupees. It is a loss. So one more creditors. Actually he debtor. So that amount how much? Actually 6,000 rupees. It is a advantage. It means it is a profit to the company. So by creditors, as he was dead, we need not pay that amount. So it is also income. So the total income, that's all. Here 12,000 rupees. So out of 12,000 rupees, if you minus 4,000 rupees, 8,000 rupees, that is profit on revaluation. Profit on revaluation. It should be shared to X old partners, old profit sharing ratio. Old profit sharing ratio is 5:3. That means 5,000, 3,000. That's all. So next we have to prepare partners capital account. And then under partners capital account, under the fixed capital, and then both we have to prepare please capital. Under fixed capital method account, two accounts to be maintained. Only one account is current account, another is second capital account. Partners capital accounts. Partners capital account. So here we will prepare all the three. So the first one, second, third, first, second, space, next. So here by balance, opening balance, how much? Brought down capital account, you see 80,000, 60,000 for X. This is on X, Y, Z. X, Y, Z. So capital account opening balance is 80,000 for X, Y 60,000. Z also brought in by bank. You have to show separately how much he brought. 80,000 rupees. 80,000 rupees. And then the capital should be based on, Y's account. For 1/5 share, Z brought how much? 80,000. So the capital, how much capital should be in the firm? So 80,000 for 1/5 share he is bringing 80,000. For one, how much it should be? So it must be multiplied by 5. So 4 lakhs should be the capital. So 4 lakhs should be the capital means the new profit sharing ratio X, Y, Z. How much? New profit sharing ratio 5:3:2. So the 4 lakhs should be the capital. So 4 lakhs into 5 by, so for X 4 lakhs into 5 by 10. 5 by 10 means 4 lakhs into 5 by 10, that is 2 lakhs. So X capital should be 2 lakhs, Y's capital 4 lakhs divided by 10 into 3, so 1,20,000, here 2, so that is, it should be 80. So the capital should be, the closing capital should be, so to closing capital balance, how much? Here 2 lakhs, 2 lakhs, here 1,20,000 and then 80,000. That's all. If you balance, the balancing figure should be transferred to the current account. Now you can balance it. It should be the closing balance. So 2 lakhs, 1,20,000, 80,000. So 2 lakhs, 1,20,000, 80,000. So 2 lakhs minus 80,000 means that is 1,20,000. 1,26,000 minus 60,000 means 60,000. Here it is tallied. He has brought in. So this is by current account. It should be transferred to the current account. This figure. So we finished. We completed the preparation of the fixed capital method under. Fixed capital account we prepare, and then current account we have to prepare. Current account, all adjustments will be there in current account. What is adjustment? Current account, partners current account, partners current account. Here also you put here. So by balance, current account balance opening balance, how much? 5,000, 6,000, 5,000, 6,000. This is X, Y, Z, X, Y, Z. So 5,000, 6,000. And then general reserve should be apportioned between the old partners, old profit sharing ratio, that is 5:3. If you distribute, that should be 37,500 and then 22,500. You can calculate, that is total amount how much? 60 lakhs. 60,000 into 5:3 means divided by 8 into 5. So that is 60,000 divided by 8 into 5. That is 37,500 and then 22,500. If you multiply, that is 60,000 divided by 8 into 3. So 22,000. Okay. Next one is profit on revaluation. By profit on revaluation, how much? Profit on revaluation, how much? 5,000, 3,000. The old partners only 3,000. And then one entry we passed for goodwill calculations. How much we passed? That is Z account should be debited 12,000. So Z account debit to X and Y. So 2X, 2Y, that is 2X, 2Y. Here by Y account, Z account. How much that amount? 7,500, that is for goodwill. 7,500 rupees has to bring, Z to bring account, bring to Y, and then 4,500 for Y. Here 2X, that is 7,500, 4,500. Do you understand? The entry will be Z capital account debit to X capital account, Y capital account. So X account, Y account will be credited. So Z account, here it is credited. Z account debit to Y. And then here we have to mention in the debit side X account debit to Y. Z. Z account debit to XY. This is correct. And then next one is The firm decided to maintain, reserves and surplus. How much general reserve? That is 60,000 rupees. It should be retained in the balance sheet. That means what? How much? 60,000 rupees. So all the partners, including the new partners, according to the new profit sharing ratio, they should bring in. So X, Y, Z. So 60,000, what is the ratio? 5:3:2. 5:3:2. So X, how much he should bring? So 5/10. Y, 60,000 into 3/10. Z, 60,000 into 2/10. So it is a new ratio. So how much here? So 60,000 divided by 10 into 5, that is 30,000. So it is for 30,000. It is for here 18,000. Here in 12,000. So 38 nearly 60,000 rupees. So you have to show reserves and surplus to reserve, general reserve. Sorry, it is general reserve. Both are same. So general reserve. How much? 30,000, 18,000, 12,000. That's all. So what should be the transfer entry we have passed in the capital account? While preparing the capital account, 1,20,000, 1,60,000. So capital account to capital account, how much? 1,20,000 and then 60,000. That's all. If we balance, I will strike out this one because space is not there. If we total, you can find out how much cash our bank, how much cash the partners should bring in. We will find it out. So if you total it, so 30,000, 1,20,000, that is 1,50,000. So we will balance 1,50,000 for X. 1,50,000 minus 5,000 minus 37,500 minus 5,000 minus 7,500. So 95,000 he should bring. So by bank, X should bring 95,000. And then here for Y, 18,000 plus 60. So 78,000. So 78,000. So 78,000 minus 6,000 minus 22,500 minus 3,000 minus 4,500. So 42,000 he has to bring in. 42,000 he has to bring in. And then for Z, that is 24,000. 12,000 plus 7,500 plus 4,500 plus 12,000, that is 24,000. We will check it. So 24,000 he has to bring. So 24,000. So he has to bring 24,000. He has to 42,000. He is bringing 95,000. So now we will prepare the bank account. Bank account. Opening balance is given in the question. So bank balance brought down 30,000 rupees as per question. And then he is bringing capital amount. How much is it? How much bringing? Towards capital 80,000 rupees he has brought in. And then to X, how much? 95,000 A, X, Y 42,000, 24,000 Z. So for current account purpose, so X, Y, Z. How much? 95,000 and then 42,000 and then 24,000. So the capital should be no other payment. So if you total, this will be the closing balance 30,000 plus 80,000 plus 95,000 plus 42,000 plus 24,000. So 2,71,000. By balance C bar D. So this is a balance. Now let's prepare balance sheet as on 31st. So balance sheet. March 24. So as per capital account, the capital should be based on Z capital. So how much capital? So X for 2 lakhs it must be, and then for Y 1,20,000, Z 80,000 rupees capital account. General reserve also we are maintaining in the balance sheet, so 60,000 rupees should be shown. Sundry creditors, actual sundry creditors 50,000. One of the creditors died, so that amount need not pay. So it was shown in the balance sheet, revaluation account. So if you deduct that amount, only the 44,000 rupees will be the creditors. Here the bank balance, now we find out how much bank balance, that is 2,71,000. So 2,71,000. And then plant and machinery, actually the value, actual value, plant and machinery 46,000 now. And then stock value, that is 96,000. Investments, that is 31,000. Sundry debtors, that is 60,000. That's all. So if you balance, it must be tallied. Please check it out. So 2 lakhs plus 1,20,000 plus 80,000 plus 60,000 plus 44,000, that is 5,04,000. So 2,71,000 plus 46,000 plus 96,000 plus 31,000 plus 60,000. So 5,04,000. So it is tallied. The answer is over. Understand? So this also over. Now we will see next question, 6th question. So it is also important. It based on the branch account, head office branch account. The Delhi head office passes one entry at the end of the year to adjust only one entry. The head office book, they have to pass one entry towards the inter-branch transactions. Some branch will be given, for example, X branch given to Y branch. So Y is the receipt. As far as concerned, I mean, in the head office book they will write who is the receiver, who is the giver, debit the receiver, credit the giver. So to whom it is given. So for example, Y to whom it is given. So Y as account debit to X account. This type of entry will pass in the books of head office. So the Delhi head office passes one entry at the end of each month to adjust a position arising out of inter-branch transaction during this month. From the following inter-branch transaction in March 2024, make entries in the books of Delhi and head office. Kolkata branch, here they are given the 2 branch transaction. Kolkata branch received actually goods from Patna branch 9,000 and Ahmedabad branch 6,000 rupees. So as far as head office is concerned, they have to pass entry in his book. So what is a transaction? Actually Kolkata branch is a receiver. So giver, that is Patna branch, that is Ahmedabad branch. What we will write? Kolkata branch account debit to Patna branch and then to Ahmedabad branch, like that. But we will consolidately, we will prepare one inter-branch transaction, and then what is the net balance? We will pass only one entry, that is adequate. We will see. And then send goods to Ahmedabad branch 15,000. And here Kolkata branch is the giver, receiver is Ahmedabad branch and Patna branch. And then sends acceptance, bills payable, acceptance. So receiver is Patna branch, receiver is Ahmedabad branch, giver is Kolkata branch. Like that. The Kanpur branch, it sends goods to Ahmedabad branch. Here Ahmedabad branch is the receiver, giver is a Kanpur branch. Received BR. So Kanpur branch is the receiver, Ahmedabad branch is a giver. So received cash from Ahmedabad branch. Kanpur branch is receiver and Ahmedabad branch is a giver. So we have to prepare the consolidated, inter-branch transaction. If you calculate what is the net balance, who has to pay and who has to receive, we will calculate like that, we will follow it. And then here, total transaction, inter-branch transaction. Inter-branch transaction. Here you have to write both bank, here particulars, Kolkata branch, here debit, credit. If he is a receiver, he should be debited. If he is a payer, that is a credit. And then Kanpur branch, it's also debit, credit. Patna branch, debit, credit. Ahmedabad bank, debit, credit. So first transaction, what is the first transaction? Kolkata branch received goods from Patna branch. So Kolkata is the receiver. So goods received, the narration is goods received. Kolkata is the receiver. How much it is received? 15,000. From whom it is received? From Patna. So Patna is a giver. So credit you have to enter 9,000 rupees and then credit Ahmedabad 6,000 rupees. So Patna branch credited, Ahmedabad branch credited, and then Kolkata branch debited. And then goods sent. Goods sent means actually Kolkata branch, if a goods sent. Goods sent means actually Kolkata branch is a giver. So total giving 27,000 rupees. To whom? Patna branch debit, receiver 12,000 rupees Patna branch. And then Ahmedabad branch 15,000. And then accepted, bills receivable. Actually Kolkata branch gives acceptance to Patna and Ahmedabad. How much? 6,000, 3,000. So total payment, payer, giver, who is the giver? So acceptance, giver is Kolkata. So 9,000 rupees bills it is paid. That is, it's for, as far as Kolkata branch, it is a payer. 9,000 rupees. Receiver, who is a receiver? Patna branch. How much? 6,000. Here, Ahmedabad branch 3,000. Receiver. So like that we have to pass for this also. Here, Kanpur branch send goods to Ahmedabad. Send means he is a payer. So Kanpur we have to write here. Kanpur, he is a giver. So send goods. Who is sending? Kanpur is sending. So we have to write Kanpur is a giver. So credit side you have to enter 9,000 rupees. Who is receiving? Actually Ahmedabad bank, Ahmedabad branch is receiving. So 9,000. And then bills receivable. Received BR. Who is a receiver? That is a Kanpur branch. How much? 9,000. So receive. Bills receivable. So receivable is Kanpur. So 9,000 rupees receiving. So paying, who is paying? Ahmedabad. So it is credited 9,000. And then cash received. How much? Cash received. How much cash received? Actually cash received means receiver Kanpur branch. So 5,000 rupees receiving Kanpur. Giver is Ahmedabad bank. So 5,000. Now we will find out balance. Each and every branch we have to balance it. Which side is greater? Credit side as per as Calcutta. So 27,000 plus 9,000, that is 36,000. Total it all the things. So 15,000. Here also totaling 14,000. 9,000 plus 5,000. Here 9,000. Here 12,000 plus 6,000, 18,000. Here only 9,000. Here 15,000 plus 3,000 plus 9,000, 18, so 27,000. Here 6,000, 15 plus 5, 20,000. So balance how much? Here 36 balance. If we balance, which side is greater? 36,000. So 36,000. Balance each and everything. So 36,000 balance. So 21,000 rupees is a credit balance. Actually balance. So he should be credited actually. Kolkata branch should be credited. So it is a credit balance. Credit side is excess of debit side. So it is a credit balance 21,000. So Kolkata account should be credited. And then as far as Kanpur branch, debit balance is increased 14,000. So 14,000 means debit balance how much? 14,000, 9,000 minus, that is 5,000 rupees, it is debit balance. So Kanpur is to be debited for 5,000 rupees, that is he has to bring in. And then here also Patna branch, which side is debit side is this also is in debit balance. So 18,000 minus 9,000, that is 9,000 balance. This is also debit balance. And then here also 27,000 is in excess of 20,000. So debit balance in exceed of credit balance. So 27,000 minus 20,000, so 7,000. So this is debit balance, this also debit balance, this also debit balance. Only what's his name? Kolkata is credit balance. So the entry must be passed in the head office book. Kanpur account should be debited for 5,000, and then Patna account should be debited for 9,000, and then Ahmedabad should be debited for 7,000. So Calcutta in aggregate value should be credited for 21,000. So that is the entry. So Kanpur account, Kanpur branch account debit 5,000, and then Patna branch account debit rupees 9,000, and then Ahmedabad debit rupees 7,000 to Kolkata branch, rupees 21,000, 5,000 plus 7,000, so 14 plus 21. So this entry is to be passed in the head office books. So it will be automatically adjusted. So this question is also over. So next question. And then one more entry. A fire occurred on 15th September in the premises of Sen and Company. The following figures evaluate the claim to be lodged with the company. So stock, opening stock, closing stock, opening stock 1/1/2023 opening stock 40,000. The same year the closing stock, same year means 31/12. This is actually next year opening balance. It was the closing balance of the previous year. So this is the opening balance of previous year, closing balance of the previous year, 40,000, 60,000. During the year purchases 80,000. Purchases up to 1/1/2023 to 15/9/2024 1,76,000. Actually fire breakout, it is not given here. Sales 2023 1,20,000. Sales from 1/1/2024 to 15/9/24, that is 2,10,000. During the year, the cost of purchase has risen 10% above and selling price 5%, salvage value 5,000. So, fire broke out as on 15th September. The following figures as a balance sheet, previous year balance sheet, figure is also given, trading account. Balances, opening stock, closing stock, purchases, sales, it's given. By preparing the previous year trading account, we can be in a position to find out what is a gross profit ratio, because at the time of the fire, the closing stock damage is not given. We have to find out. It is a balancing figure, missing figure, we have to find out. So first of all, let us prepare trading account. After that, memorandum trading account. So what will be the claim, we have to find out. But one more thing we have to note, that the cost price for the current year, it is increased for 10% above the last year. And then sale price also increased by 5% above the figure of the previous year. So we have to prepare like that. Please wait and see. So we will prepare first trading account. In order to find out, actually fire broke out. When fire broke out? Fire broke out on 15th September 2024. So in order to find out the gross profit ratio, we have to prepare trading account of the previous year, because figures are given. So trading account we have to find out. What is a trading account value? So opening stock, that means 2 opening stock, 40,000 rupees. Opening stock is given. And then purchases also given. Purchases, how much? 80,000. And then sales, by sales during the previous year, that is this figure. Sales for, that means 1,20,000. So 1,20,000 rupees sales. And then closing stock on, I mean this figure 60,000 rupees by closing stock. 60,000 rupees. So if we balance 1,80,000, so balance 1,20,000, so the remaining balance is 60,000 rupees will be the profit. So gross profit is 60,000 rupees. So gross profit ratio, so gross profit GP by sales into 100. So GP 60,000, sales 1,20,000 into 100, that means 60,000 divided by 1,20,000 into 100, that means 50% is the gross profit ratio. So we found out gross profit ratio. Now we have to find out the memorandum trading account. In order to find out how much claim on the date of fire, we have to find out. So memorandum trading account, the space is much required. So memorandum trading account. So memorandum trading account from 1/4/24, 1/1/24 to 15/9/24, the date of fire, we have to find out. Here last year, current year, last year, current year, we have to prepare like that. So what is the opening stock value? That is opening stock 60,000 rupees. So to opening stock, that is 60,000, that is 60,000. And then purchases, how much? Actually, how much purchases is given in the question? That is 1,76,000 it is given. So it is current year. This is current year, this is last year, current year, last year. So current year purchases, it is given in the question how much? That is 1,76,000. One thing it is given, actually the purchase cost of raw material is 10% increase. So 10% increase means previously it was 100%. Now it is 10% increase. That is 110%. So for 110%, 1,76,000, how much should be for 100%? So 1,76,000 divided by 110%. If we put So what will be the 100%? 1,76,000 divided by 110 into 100, that is 1,60,000. So it should be 1,60,000. Understand this one? Here sales, sales how much? Actually that current year sales 2 lakhs it is given. Up to the date of fire the sales is 2 lakhs. So sales 2 lakhs, 2 lakhs. That means sales 2 lakhs means, that means what? It should be 110%. So 2,10,000, I mean by sales 2,10,000 divided by 105, so 100. So here 2,10,000, sorry, current year it is given, just 1 minute, 2,10,000 it is given for current year. Actually sales value has been increased by 5%, so it is belonging to 105%. For 105%, if it is 2,10,000, so how much should be for 100? So how much it should be? So 2,10,000 divided by 105 into 100, that is 2 lakh. So this is 2 lakh. 2 lakh. Next, here what will be the closing stock? Is there anything given in the closing stock? So you balance, first you balance the last year, this amount balance you have to balance. I mean 60,000, 1 lakh, and then 2 lakh means the GP 50%, actually to gross profit 50%. So out of 2 lakhs 50%, that means it is 1 lakh. Now if we balance, we can find out the closing stock. So what is the balance? That is 60,000 plus 1,60,000 plus 1 lakh. So 3,20,000. So 3,20,000. If we balance 2 lakhs, that is 1,20,000. So this amount will be 1,20,000. Actually 1,20,000. Here now you balance it. How much? 1,20,000 means current year it is increased by 10%. So it is previous. So closing stock should be the cost price plus 10%. So 1,20,000 plus 10%. So it should be how much? 1,20,000 into 110%. That is 1,32,000. This is the way you have to find out what is the closing stock at the date of fire. So this is the figure. This is the closing stock. You can balance like that, and then how much it is a balance? 3 lakh. If you add these both, so 3,42,000. 3,42,000, and then if you balance, that is a GP, whatever it may be, but we find out the closing stock. So it should be 106 lakhs. Normally if you calculate, that is 50%, so it should be 105, but here it may be 106. So from closing stocks we find out the GP. So we take into account this amount, 3,32,000. So what is the amount of claim? Is the amount of claim is closing stock rupees 1,32,000 less, actually there is a salvage value, we have to deduct the salvage value. How much? That is 4,000 rupees as per the question. So remaining balance we can claim from the insurance company. This is amount of claim, actual value of claim, actual value of loss, anything, actual value of stock loss or claim, anything. This is a correct answer. So 1,28,000 is the claim, actual claim. That's all. And then we will see next question. Question number 34 2023. Limited obtained a loan from the bank 200 lakhs to be utilized as a construction of asset. Normally the construction of asset is a qualifying asset. The purchase of, if it is a qualifying asset, the interest on the loan should be capitalized. And then here the purchase of machinery, working capital, advance for purchases, all the things are actually not qualifying asset. So interest on these loan should be revenue nature. It should be it should be entered in the profit and loss account. So here revenue nature. In March, the construction of set was completed and machinery installed. The delivery of truck was not received. The interest charged by the bank for the total interest charged is rupees 36 lakhs. So advise the treatment of interest as per accounting standard 16. So accounting standard 16. As per accounting standard 16, the borrowing cost should be capitalized if borrowing cost is directly attributable to acquisition or construction. So the production of the qualifying asset. So asset acquired must be a qualifying asset and the borrowing cost should be directly attributable to the acquisition and construction, the production of qualifying assets. So how to find out the treatment? So this is the treatment. So total construction of, what is the total expenditures? Actually the construction of said, that is a qualifying asset, that is 80 lakhs. That is 80 lakhs. That is purchase of machines, that is 60 lakhs. And then one more machine, that is also 40 lakhs. And then advance for truck, that is 20 lakhs. So the total expenditure is 200 lakhs. So construction of said is a qualifying asset, that is for total interest. How much? Total interest 36 lakhs. It is given in the question, 36 lakhs. So construction of said, that is a qualifying asset, so it should be capitalized. How much it should be capitalized? Out of 200 lakhs expenditure, the construction of said expenditure is 80 lakhs. So the interest, total interest 36 lakhs. So interest belong to the loan obtained for construction of said is 80 divided by 200 into 36. That is 80 divided by 200 into 36. That is 14.440 lakhs. This should be capitalized. Understand? So others remaining, how much balance? Total 36 lakhs. So the 14 lakhs 40,000 should be capitalized. So the remaining account should be expensed. It should be debited to the profit and loss account. How much? So 30 lakhs minus 14 lakhs 40,000, that is 21 lakhs 60,000. It is a revenue nature. It should be expensed. It should be debited to P&L account. It is answer. You have to write like that. So this question is also over. And then next. And then goods purchased. Goods purchased for US dollar 10,000 rupees, that is 76.760. So exchange rate, if you want 1 US dollar, you have to pay Indian currency 76 rupees 60 paise. That is exchange rate. So exchange rate will be fluctuating. It is differing from year to year, day by day. It is changing. Here exchange date on 31/3/2022 is also given, that is 77 rupees. And then actual payment, that the expenditures amount actually paid on 5/6/2023, that is 77 rupees 50 paise. Evaluate the loss and gain for the financial year 2021-22 and then 23-24, not 22-23, 23-24. You have to find out. So how we have to find out? We have to So goods actually purchased, goods purchased when goods purchased on 24/2/22 we have purchased for rupees US dollar 10,000. At the time exchange rate 76 rupees 60 paise. So as per accounting standard 11, as per accounting standard, foreign currency transaction should be reflected, should be recorded by applying the exchange rate. For how much we should be recorded? So 10,000 into 76.60, that is rupees, Indian rupees 7,66,000 rupees, for which it should be recorded. Understand? As on the transaction date. First, it's over. And then as per the balance sheet date, what is the balance sheet date? Exchange rate and 31/3/2022, that is 77 rupees. So as per accounting standard 11, at the balance sheet date, all monetary items should be reported using the closing rate. What is the closing rate? As on 31/3/2022, that is 77 rupees. So 22, that is 77 rupees. So at that rate we will calculate this amount, that is 77, that is 7,70,000 should be recorded. So it should be reported using the closing rate, and the closing as on 31/3/2022, 7,70,000. Here there is a exchange loss. Actual we paid this amount, actually mean on the as on closing date, actually transaction amount 7,60,000. What is the loss? So 7,70,000 minus 7,66,000. So the loss will be 4,000 rupees loss, Indian rupees. It should be debited in the profit and loss account for 2021-22. So 2,000 rupees loss. Understand? And then as per accounting standard accounting standard 11, as per accounting standard 11, exchange difference. What is the difference? Actually, what is the data payment? The data payment is, what is the data? 5/6/23. Actually it is a data payment. On the date, how much the value? Rupees 77 rupees 50 paise. It is Indian currency. So 10,000 into 77 rupees 50 paise, that is 7,75,000 less actually this amount. How much? 7,70,000. So 7,70,000. So what is the difference? 5,000 rupees. So it will be debited. It is a loss. It will be debited in the year 2023-24. So loss of rupees 5,000 should be debited to P&L account. So this also, this one is a correct answer. So it is a treatment. We will see next question. This is question number 8. The expenditure incurred 5 lakhs. The interest cost capitalized 26,000. Amount borrowed 2 lakhs. Asset transferred to the construction to 1 lakh. Cash payment during 23-24 75,000. Progress payment received 3,70,000. New borrowings 2 lakhs. So here the borrowings 2 lakhs, and then amount borrowed till 2023, that is 2 lakhs. So total borrowings how much? 4 lakhs. What is the rate of interest for that? So interest how much? Interest rate is how much? 13%. So here we will see one by one. The amount of borrowing cost to be capitalized. How much to be capitalized? We will see. So it is also easy question. That's all. So total borrowings total borrowings till 31/3/2023, that is 2 lakhs. New borrowings, that is 2 lakhs. So total 4 lakhs. So total borrowings 4 lakhs. And then borrowing cost 13% interest. So borrowing cost at 13% interest. So 4 lakhs into 13%, that is rupees 52,000. So how to proportionately we have to apportion it, we have to find it out. So total expenditure how much? The total expenditure how much? Actually the first expenditure incurred till 31/3/2023 5 lakhs we have to take into account, along with 26,000 rupees interest, that is also capitalized. The total amount is 5,26,000 we have to take into account. And then cash payment during the year 23-24, that amount is 75,000. And then asset transfer during the period, how much? 1 lakh. So the total expenditure will be 5,26,000 plus 75,000 plus 1 lakh. If we total, that is 7,01,000 rupees. So we have to deduct if there is any progress payment. Progress payment is 3,70,000. You have to deduct it. Progress payment, that is 3,70,000. So 3,70,000, 7,01,000 minus 3,70,000. So 3,31,000. 3,31,000. This is amount. So actual amount how much? 4 lakhs into 30%. Here what it is given, actually estimated cost 4 lakh, and then interest cost capitalized for 2023 26,000, that is 4,26,000 total amount. So we have to calculate for 4,26,000 actual amount 3,31,000. Then what is the interest rate? Interest charges is 13%. Total borrowing is 4 lakhs. So the capitalized, how much should be capitalized interest? That is 52,000. If you multiply this amount, you will find out the borrowing cost to be capitalized. So 3,31,000 divided by 4,26,000 into 52,000. So amount how much? That is 40,404. 40,000. So this amount should be capitalized. We are going to the end. So borrowing cost to be capitalized. Borrowing cost to be capitalized. This is 40,404 is the correct answer. And then one more question. And then next, this is small question, we will finish it shortly. So on 31st March, club had subscription in arrears, that is 28,000, advance rupees 4,000. During the year ended 31st March 2024, the club received subscription rupees 2,08,000 and then 12,500. You have to prepare subscription account. I had already explained in the previous class how to prepare subscription account. So subscription account, if we prepare, we can find out how much it should be according to the income and expenditure account. Actually what is given? Subscription account, opening balance, arrears it is given. Previous year's arrears. How much? 28,000. That is so subscription in arrears 28,000. So it is to be mentioned to balance opening balance. Actually previous year's arrears to be mentioned as a opening balance. It is given, that is 28,000 in the question. So it is a previous year subscription receivable. And then subscription receivable, received in advance, that is also opening, it should be entered in the credit side, that is also given by balance brought down, that is in advance. How much we received in advance during the previous year, that is 4,000 rupees. And then we have collected towards subscription as per receipts and payments account or cash portal. By cash, you can write by cash or receipts and payments account, like that you can, how much you collected subscription towards subscription, 2 lakhs 8,000 rupees. And then still during the year, actually subscription arrears, how much? 1,600 rupees per person. Understand? So the five members who had not paid, so subscription still receivable. So subscription arrears by arrears. So balance C body you have to write, that is arrears for from 5 members at the rate of 1,600. That means 8,000 rupees, that is subscription arrears. So subscription arrears account debit to subscriptions. And then subscription received in advance, how much? That is 12,500 rupees. This amount, total amount received 2,08,000. We have mentioned it. Out of that, 12,500 is belong to the next year. So received in advance, that is the balance C bar D, that is arrears. For the next year arrears, we have received now itself. This is advance. We have received in advance. So received in advance. How much? 12,500. So if we balance, now we have to find out, we will find out how much it should be charged to the income and expenditure account. So 4,000 plus 2,08,000 plus 8,000. So 2,20,000 minus 12,500 minus 28,000. So 1,79,500 it should be charged to income and expenditure account. This amount should be, so subscription account debit to income and expenditure account. Income and expenditure அப்படினா என்ன வரும்? Income and expenditure. So by subscription, how much? 1,79,500. Understand? That's all. And then one more small question. X and Y are partners in the ratio 3:2:1. We admitted with 1/6 share in future profit. Z would retain the shares and calculate the profit sharing ratio of the new parties. Very, very easy. It's a small question. We are going to close. So X, Y, Z. So 3 partners. Old ratio and then Z. There are 4 partners. Just 1 minute. There are 4 partners, X, Y, Z, and then new partner W. So old partners between X, Y, Z, the ratio is 3:2:1. That is 3/6, 2/6, 1/6. Understand? W is the new partner for whom, to whom the share given is 1/6. The Z will also hold the same 1/6. So the sacrificing will be only between X and Y. So X and Y means 3:2. So sacrificing 3/5, 2/5. Z will secure the same ratio, that is 1/6. So if it is 1, out of that W we have to give 1/6. So the remaining, how much? 1/6. 1 minus 1/6 is equal to 5/6. So the remaining Z will have the same ratio, that is 1/6. If we deduct the same, the remaining will be 4/6. So the 4/6 will be taken between X and Y in the ratio 3 by 5, 2 by 5. So the new ratio between X and Y will be 3 by 5 into 4 by 6. For Y, 2 by 5 into 4 by 6. For Z, the same 1 by 6. For W, the same. It is given 1 by 6, the same. So what will be the ratio of X and Y? That is 3 into 4, 12, 12 by 30. Here 2 into 4, 8, 5 into 6, 30. So 12 by 30, 8 by 30, here 1 by 6, here also 1 by 6. For Z 1 by 6, for W 1 by 6. So if you equalize it, you have to multiply by 5, 5 into 5, 5. So the ratio will be 12 by 30, 8 by 30, 5 by 30, 6 into 5, 30, 1 into 5, 5. So 5 by 30. So ratio will be 12 is to 8 is to 5 is to 5. This is a new profit sharing ratio. That's all.